All right, guys, I don't know how else to say this, but you know darn well, anytime our guy Gordon Johnson gets on TV, it's going to be ridiculous. So let's see exactly what the Bulls and the Bears have to say, and I'll give you my take on both those sides because the Bulls don't honestly always get it right either. So let's kind of look at both ways here and see exactly how it goes. I just ask in exchange for you to gently tap that like button and consider subscribing to It's Super Easy to Do if you like the truth without the hype. And guys, I just released a video to my group talking about the new tool that is coming, and I just made a whole bunch of sales in the group, if you can believe that. I rarely sell, but I finally did sell out of some stocks there. There's a video explaining it all in there. You could see all the buys and the sells in real time. You could take 5 courses for free and a ton more, honestly. I put videos in there. You talk to me in the Q&As. There's so much coming, guys. It's incredible. So make sure you check out the pinned comment down there and see everything that's included and see if it's a right fit for you. And I may have left something special down there for you guys that want to check it out. So go ahead and check it out, at least for that. All right, so let's dive into this video here. This is always one of my favorite things to kind of see what the Bulls and the Bears are saying. And you guys know Gordon Johnson's my favorite here. So let's see what he's got.
Hatem Diab. This is a Bull-Bear debate. Hatem Diab, Managing Partner, Gerber Kawasaki Wealth and Investment Management. Gordon Johnson, CEO, Founder, GLJ Research. Thank you both for being with us. Hatem, you've been on with us so many times. You always say don't bet against Elon. While you don't give exact price targets, you certainly give the trend, and that is that you're a believer in Tesla and its stock. In the meantime, Gordon has basically a $24 target and a sell rating. So Gordon, hold on. Hatem Diab, what did you like about Tesla and why do you see this growing?
Hey, Nicole, thank you for having me. Listen, it was a great report. They've reached $25 billion in revenue, almost at least. So they're like a $100 billion run rate. That's a very exclusive club to be on. Margins are good. I expected them to be a little bit less, but they came in at 18%. So that's also very good. And really, they're growing fantastically well, almost 50% top line. So I don't know what's bad in this report.
Yeah, I won't really argue there. I think we talked about the same exact things right here on this channel. I mean, it's pretty clear cut. Good earnings, nothing spectacular, blowing out of the water or anything like that, but nothing negative. But of course, you know, Gordon's going to do Gordon. So let's see what he's got.
Okay, so the first thing that Gordon's going to say is about the margins. And Gordon, keep it short so we can have a nice discussion. Go ahead, Gordon. Let's hear you.
Clearly, as Gordon's been on this channel more than one time, and this the lady here doing the interview knows him quite well and how he can completely, I guess, I don't know, I call it derailing. He can completely derail the interview, go way off course and just off on these tangents. And I think that's kind of what a lot of folks do in the stock market in general. Even not just guys like Gordon who are kind of cartoon characters, but people in general, you know, get these ideas and they, you know, get running on a subject, you know, like Meta being a trash company or something like that. And they go so far off on a tangent on one side or the other that when you actually get back to what are the facts, that's actually what matters, but they never get there because they go way off track. Anyways, I just found it funny that that same exact thing happens. And clearly she knows Gordon is a gonna run whatever way he's gonna run.
All right, so I think where the Bulls are dead wrong is in the auto industry, you had a temporary chip and supply chain issue where you had shortages in 2021 and 2022. We know that used cars are selling for more than new cars, right, which is an anomaly. And that allowed Tesla, who's willing to cut corners on chips, CNBC did a spread on this, to have artificially high margins. Now their margins are regressing back towards the mean. Their operating margins were 24% in the first quarter of 2022. They were 9.6% last night, down from 11.8% in Q1. So it's just not the company that people thought it is. Their earnings profile is much lower, and they're still cutting prices. So that's the problem, and I think that's the story for Tesla in 2023.
Look, I mean, at this point, yes, the valuation certainly seems very high. The prices they cut, Ford has been cutting prices, but they are creeping a little back higher. Hatem, let's kick it off. What is it about Gordon, what he's been saying? I mean, we know that the factories, he said, Elon Musk said that in the third quarter, production may be down because they've been doing some factory upgrades. You really like what they've been doing in Berlin and Austin, for example, Hatem?
First of all, the margins are going down because Tesla is investing heavily in its growth. I think that you want a company that is a growth company.
Hey, this guy needs to understand that you can't use facts to, you know, refute opinions and narratives. Come on. He needs to get on board here with what we're supposed to do on these type videos. But yes, I don't know, guys. It becomes, you know, there was a time when you could truly question a lot of what Tesla was doing in regards to, is that going to work? Is that not going to work? Are a lot of these innovations actually going to pay off? Are they not going to pay off? Sure, 3 years ago, you could make those arguments. 4 years, 5, 6 years, obviously, those were very valid arguments. But once something is proven, and obviously anybody who understands how to reinvest capital into a business understands exactly what happens to those various margin numbers, you know, Gordon's just choosing to gloss over that and try to apply the fact that, legacy auto can't reinvest in new factories and bigger factories and more upgraded equipment, at least not on the scale that Tesla is, without taking out debt. They have to do it that way. Tesla doesn't have to do that. They can just spend their profits doing that, which of course is the reason why the margin argument is kind of a moot point at this stage in regards to Tesla. They pretty much have the margins to do whatever they want, however they want, and grow as fast as they want, which is something when you're trying to compare the numbers for legacy auto versus Tesla, that for me is the biggest differentiator. We can talk about the energy and all the other stuff like that, which you guys know for me is not the reason why I own the stock. But I can definitely say that when I look at Tesla and then if I just showed you the numbers, just the balance sheet and income statement of legacy auto, pick your company over here, and then Tesla over here, you would not even know that both of them were car companies because they look so vastly different. So any sort of argument like that, especially when we get down to the financials, is easily debunked in regards to this. Like I said, some of the stuff that was 4 or 5 years ago and wasn't true yet, and that's what you're striving for. Okay, I can make sense arguing whether it does or does not happen, because there's a lot of times a lot of things don't happen that are promised by CEOs. But in the case of this one, it absolutely isn't true.
Investing and really creating new products and batteries and chips. They just filed in Berlin for a new plant that's going to manufacture over 1 million cars in Europe. So if you think about that, currently Berlin does, 200,000 cars. So I think the growth potential there is really tremendous. And as far as what Gordon said about the chips, Tesla is also investing, they said, I think, over $1 billion in their dojo and their chip manufacturing. So from an AI perspective, it's probably the only company that really has a true AI or solution for self-driving car that is really sustainable and that will continue for a long time.
Okay. And so, Gordon, I know that you're not so trusting on the chips. You've also often said that you're not even a believer in the fact that they are making batteries. You don't believe really in the self-driving, right?
Well, they're making batteries, but everything they said at Battery Day, we now know is a farce. Listen, when people at Gerber Kawasaki don't have models, they don't understand what's going on. Tesla's other income was a $370 million benefit this quarter to the bottom line.
Has or doesn't have.
They would have misnumbered. If you look above the other income line, their operating income was down 3% quarter over quarter, 10% year over year. Listen, this is no longer a growth company. It's an auto company. 86% of their revenues from selling cars, 98% of their gross profit from selling cars. What auto companies have to do is cut the price to move units. 2,000 auto companies, Warren Buffett made this point, 2,000 auto companies emerged in 1905. Nearly all of them went bankrupt. Why? Because it's highly intensely competitive, high capital intensity, and Tesla is being shown to be an auto company. And no matter what Gerber Kawasaki says with respect to how great they love the company, margins are collapsing. They're going to continue to collapse. And the reason why they produce more cars than they've sold now for a record 5 straight quarters in a row, and their production is going to be down in Q3 is because they have a demand problem. They're getting crushed in China. Market share 30.
I don't know where he's going with that. Yeah, the reason why they had delivery numbers going up every single quarter for the past 5 quarters is because they got a demand issue. That's why it's going down next quarter. Or they could be retooling factories. One of the two. I don't know. I don't know how you could show that demand is increasing quarter after quarter after quarter, 5 straight quarters, and then say there's a demand problem. Doesn't make any sense, but this is kind of what the Bears do.
To 11%. They're getting crushed in Europe. Market share from 30% to 15%, and their market share is falling in the EU. And again, now that we don't have supply chain issues,
okay.
They're suffering.
Okay. Let me jump in here because the first thing is I'm going to say is how do you know what models Gerber Kawasaki has and does not have? That is you can't assume anything like that. However, I'll let that go and say, look, when you talk about market share, Hatem, there's...
It's pretty funny. She didn't even let him unmute his mic. She just kept talking knowing he was going to try to blast back. Pretty funny. And we'll talk about is Tesla a car company, FSD, and that sort of stuff here at the end. So we'll get to it here in just a second. I got a comment on that as well.
Question that the competition has been increasing. Do you think that they can continue to be the leader that they are? Look, there are many people who think it's overvalued, but does $24 price target and a sell rating seem ridiculous to you?
Thank you for saying that, Nicole. I don't know what Gordon is talking about models. I don't think I need to showcase any kind of our models. But ultimately, what Gordon is looking at is completely wrong. What Tesla is trying to do is trying to go after the whole car market, not just the EV market, and that's only 6 or 7% currently of the 15 million cars that we sell in the United States or 100 million globally. So if Tesla has 60% of that market, but that market itself is growing, so we don't need Tesla to have 70% of the whole market. So I think what's missing here is the fact that Tesla, the Model Y, has been really the top-selling car basically everywhere. So the growth story here is really just getting started, and they have the best battery technology, they have the best software, so they're really the top dog no matter how you look at it.
Gordon, Cybertruck is going to be produced in high volume next year. Final thoughts here, Gordon.
So we don't know if it's going to be produced in high volume, right? It's 3 years late. They were supposed to be producing high volume this year. Now they should have next year. But I just want to highlight something he said when he says they lead everywhere and they lead in batteries. That's just not true. They don't lead in China. That's BYD. They don't lead in Europe. That's VW. And now you have Ford and GM coming. With respect to, the final thoughts. Look, Elon Musk is telling you they're going to produce less this quarter, right? That's a big problem. And he's telling you they're going to continue cutting prices, which they've done. You don't cut prices. CarGurus has Tesla's prices down 35% over the past year. The average car is down 5%. GM's down 1%. Ford is up 1%. So they're cutting prices far much more than the competition. The reason is because people don't want to buy their cars. They have 1.67% share globally, 4.4% share in the U.S. This isn't a leader. They are a laggard.
Okay.
Nobody wants to buy their cars, but they sell every one they produce. I don't know. And just I don't know, points. The typical Gordon tropes as we kind of go through the debate per se that rages here on this on this deal. Yeah, definitely Cybertruck being delayed another year definitely sucks. But he kind of didn't really say there was no demand for that either, which I kind of thought he was going to jump on there. So it kind of tells you something in regards to Cybertruck. Now, do I think all those pre-orders are going to go through and all of them eventually turn to customers? No, absolutely not. I absolutely think that price is going to be a little bit higher than a lot of people thought it was. Definitely higher than what it was going to be pitched to be. However many years ago they started taking pre-orders for the Cybertruck. So keep those sort of things in mind as well. Demand's probably going to be better than what the Bears are saying. However, what the Bulls are saying, I don't think it's going to be near that either. So kind of some quick thoughts there on Cybertruck.
You had to tell them about the margin that you were looking at, the X-Auto margin, quickly.
I mean, 18%. Come on, Gordon. What are you talking about, buddy? It's
Those margins of automakers. They sell direct to the customers, which means their discounts are in SG&A, whereas other automakers' discounts are in gross margins. Look at the operating margin. They are lagging.
Gordon, $24. $24. Come on, Gordon, $24.
It's going to get there. When it does, we'll have you on to say congrats.
Come on, $24, Hatem?
I mean, it's silly. I mean, the company's doing $100 billion in sales and 18% margins. Go on.
Where's the real value of? Where should it really be, Hatem?
Listen, they're a software company. We haven't seen what the potential is of full self-driving. We haven't seen what the potential of this AI revolution. They're spending a lot of money in there. The Cybertruck, yes, they're not going to produce a lot of them, but this is going to be also another top product. I think they're going to sell hundreds of thousands of it, and ultimately, this will own 20% of the whole car market.
Okay, let's leave it right there. I like the bull bear debate. Thank you both very much. Hatem.
All right, guys. So right there, kind of on the final point, you can kind of see where Gordon has his deals. I don't view Tesla currently as a software company. I think they're moving that direction. I think there's a lot of things coming in the future that may point to Tesla being something more. They're absolutely growing in a lot of different segments. We saw that. But when, I hate to say it, but when Gordon makes a point, like, 98% of the gross profit is from the autos, you're currently an auto company trying to expand out further into, other ventures, other deals. Unfortunately for me, FSD and all those sort of things are a cherry on top. That's not something I'm banking on anytime soon. Same thing with robotaxi, same thing with a lot of other business lines that are there. When you kind of work through what all is going to happen from a regulatory standpoint, and you guys see, at least here in the US, trying to get something through federally is going to take forever. And then the different states, the different municipalities, everybody else is also going to pass their own legislation. And a lot of other things like that. I think we have a much longer road to go when he finally solves it. And I've been hearing next year now, guys, Elon's been saying it for what, 6, 7, 8 years, something like that. Absolutely, for really the past, 3-4 years that I've owned the stock, absolutely something I've heard all the time, that it's coming next year, and we still aren't there. And hey, the beta still looks better, and it's hard, guys. It's very, very hard, and it's going to take more time. And banking revenue models on something like that, to me, is, fool's gold this early in the stage. Now, later on, if it happens to happen, or for me, I view it as a cherry on top. So I think it's absolutely coming. I think they will get there. I'm not sure they're going to see people wanting to spend, $5,000, $10,000 on it at a pop, on an already expensive vehicle for the most part. It's just people's finances are getting more and more and more stretched, and to just think arbitrarily, millions of people are just going to pay for it. I don't know if that's necessarily going to be the case. I absolutely agree that being able to share with other automakers is definitely another revenue line that's going to come in. I think that right there is kind of some of the more longer trend things on the tail end of that that's going to really, really drive revenue that way. But until we get to those points, right now it is an automaker trying to expand into other things. And I'm not counting on FSD and a lot of those other things to be key drivers, for the next few years for Tesla. Will it get there? Absolutely it will. What it's going to look like, I don't think is how we think it's going to look right now. Same thing with robotaxi and a lot of other things like that. So I just kind of want to not necessarily agree with Gordon because I clearly don't. It was clearly a great quarter. And let's be honest here, guys. Tesla is still a great stock, even if it never becomes anything more than an automaker. Even if all they make is EVs in the end, and the energy business just does so. It obviously adds to the bottom line. It's very nice to have, but it's never a making up 30% of the revenue or anything of that nature. And same thing with FSD and some of the other software related things that are out there. Even if those things are never major contributors like everybody else says that they're going to be, that's okay. They can still dominate on the auto side, given their margins, given everything else that they're doing, and still make it a great stock for me to hold long term. And that's the reason why, anytime with Tesla, especially with Tesla, you got to cage the bulls kind of with the bears. And remember, if you want access to all my buy and sells in real time, you want to see my watch list complete with price targets, you want to take 5 courses for free, you want access to that tool as soon as it comes available completely for free with your membership as well. We got tons of exclusive videos. We got the best Discord out there, all kinds of stuff, guys. There's just so much. Check out the pinned comment down there. I may have left something special for those of you guys that check it out. So check it out and see if it's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.